Greetings, everybody. Welcome to Liberty Call for January 21st, 2025. Hope everybody's having a fantastical day out there in the interwebs. Looks like the markets are rallying after the inauguration, and things are really headed in a, positive direction for today. So, but before we jump into some positive or the market news, which we're really jumping, I need some help from you. Could you give me some thumbs up, a like, share, subscribe, a follow, and press that notification bell? All right. Well, before I hop into the numbers, how are y'all enjoying the snow down there in Texas? I know I got quite a few people that watch this, or my clients that are down there in Houston, and y'all are getting snow. So I got about 6 inches of global warming out here in my front yard that I've had to clear twice over the weekend. So the first time was a lot of snow. We got a bunch of snow. I guess it was Friday, Saturday, and then so I cleared the driveway of the deep stuff on Sunday morning, and then Sunday night it snowed again. I mean, it was only like that much, but that much can be very slippery and cause you to slip on your driveway. Today was trash day, so I had to go out and clear the front up by the house and then clear a path out to the road so that the Amazon guy could get in yesterday. And anyway, all right, well, let's hop into the markets. All righty, Dow Jones was up today 1.24%, 538 points, closed at 44,026. S&P 500 up 0.88%, 52 points, closed at 6049. Nasdaq up 0.64%, 126 points, closed at 19,756. Let's see here. The VIX was down 5.57 today. It's at 1493. Canada was up 0.44. Brazil was up 0.46, and Mexico up 0.4. In Europe, Germany was up 0.24%, the UK up a third, France up 0.48%, the Netherlands down 0.31%, Spain down 0.14%, Italy down 0.23%, Switzerland up 0.57%, and Portugal down 0.23%. All righty, let's get, where's the Russian exchanges? The MOEX was up 0.12%, RTSI was up 2.15%. And the overnight markets, the Nikkei Japan was up 0.3, Australia up 0.66, New Zealand down 0.47. In China, the Shanghai was down 0.05, Shenzhen Component up 0.48, China A50 down a tenth, DJ Shanghai up 0.07, Hang Seng up 0.91, Taiwan weighted up 0.14 in the, that's the last one. All right, getting ahead of myself. All righty. Well, like I said, markets today were in a good mood. I think, depending upon your political affiliation, you might be in a happy mood today, or you might be sad and screaming up at the clouds. So I don't know. I personally am not on either side, so I don't like either team. I was thinking about this earlier. It's kind of funny how, if you're on Team Red, you think everything that Team Blue does is horrible. And if you're on Team Blue, you think everybody on Team Red is terrible. Well, I look at both sides and say, your politicians are awful on both sides. And they're just, tricking you into thinking the other guy's bad. When in reality, we probably get along a lot more than you thought. I mean, yeah, there's some weirdo lefties and righties that are so extreme that you really just don't want to live around them. But, in the grand scheme of things, it's the policy. It's DC that's the problem, folks. So anyways, all right. That's my little soapbox talk for today. All right, market recap. U.S. stocks gain on Trump-fueled optimism. So let's see what happened today. U.S. stock markets rallied on Tuesday as investors weighed President Donald Trump's newly announced policies aimed at accelerating economic growth against the looming threat of tariffs on Canada and Mexico. The S&P 500 climbed 1%, and the Dow Jones Industrial Average gained 0.8%, and the Nasdaq 1.5%. Yep, we already covered that. Trump, who took office yesterday, signed a flurry of executive orders addressing trade, immigration, and government efficiency. Among the key actions was a directive for federal agencies to investigate U.S. trade deficits and propose remedies such as tariffs or policy changes. I'm going to stop here. Put a little mark here so I know where I was. I read an article. I think I shared it on Facebook over the weekend from Mish Talk is I think the guy's Twitter handle. I think his name's Mike Mish something. Anyways, he had an article with some charts and graphs showing how the trade deficit or the trade imbalance with us and China is a little weird, because typically when you export, say you export $1 trillion, or let's say $1 million worth of goods from China, it goes out from China and it's valued at $1 million. Well, there's costs and expenses involved with insuring it, transport, and everything else. So the cost of goods when it comes to the port of entry on the other side of the trade, let's say Los Angeles, they may value it at, uh, say 1.1 million because of the extra costs involved in getting it in. So there's going to be that small little gap. Well, what's been happening is that, um, you know, China says X comes out, but when it comes into the US, it's like X minus 15 or 20%. And it's like, shouldn't it be higher instead of lower? So they're in it, China and US, and it's not the same going the other way. It's what would be considered normal. And it's the same around the rest of the globe. It's just China and US where this discrepancy, and a lot of goods come from China. So somebody's fudging the numbers somewhere. So, anyways, let's get back into the recap. While he hinted at a potential 25% tariff on Canadian and Mexican imports starting February 1st, he held off on immediate action. Additionally, he withdrew the U.S. from the Paris Climate Accord, and the World Health Organization delayed the TikTok ban by 75 days and introduced a plan to end birthright citizenship, which is expected to face legal challenges. Now, if we can stop here, I got into a few debates on social media yesterday about this. What it really comes down to is let me bring up the text of Constitution. Google U.S. Constitution, and here we are. I have a handy dandy app on my phone. Articles, amendments. Here we are. Where's the amendments? 14th Amendment. All right. So here's the applicable text that everyone is losing their minds over. Where is it? All persons born or naturalized in the United States, and this is the key part, and subject to the jurisdiction thereof are citizens of the United States and of the state wherein they reside. So that is the key the key language, and what that means. And Dr. Brian McClanahan, he's a professor who is fantastic on pre-antebellum history and constitutional law. And that's the thing. That's what the people or conservatives will use as their argument when it goes to the Supreme Court, is that foreigners are not subject to the jurisdiction of the United States. Yeah, they're subject to our laws. You can't come in and steal or kill someone. And I mean, you'd be subject to those civil to those penalties, but you're not subject to jurisdiction. And the example I would use is that, let's say I'm a Texas resident. I'm not, but I used to be for a long time. And let's say I own a business, and say I own a vacation home out in California, and I go and live in my vacation home for 3 months. As long as I don't live more than 6 months and 1 day in California, I'm not a California resident. So I can live and work there remotely for my Texas business, and they have no claim on my income at all. I know, I mean, yeah, for like sports athletes and stuff, they collect taxes, or they collect income when you play a baseball game in their state, and they have ways of working around that. But in, the basic rules, because California does not have jurisdiction over this hypothetical situation, that's the same situation. You are a guest in the country, whether or not you're a legal guest or not. You are a guest in the United States. You are not under the jurisdiction of the United States. You're subject to our laws, but you are not subject to the jurisdiction. You're not a subject of the country. So you're a guest. So, anyways, that's where it's going to go. I know a lot of people. These midwit scholars on the internet. It was fun to get into some arguments with them about it. So. All right, where was I? Trump also created the Department of Government Efficiency, appointed Tesla CEO Elon Musk to lead it because Vivek is out. Market analysts anticipate heightened volatility in the short term, but remain optimistic about stock and dollar performance in Trump's first year. On the corporate front, earnings season gained momentum with positive results from 3M Co. and Charles Schwab, both exceeding expectations and fueling optimism. Streaming giant Netflix was set to report after the market closed, with investors closely watching for indicators of future market direction. Bitcoin soared 3% following the announcement that Trump's SEC, under acting chair Mark Ueda, would establish a crypto task force to provide regulatory clarity. This move aligns with Trump's pledge to position the U.S. as a leader in the cryptocurrency industry, fueling optimism within the sector. As investors digest Trump's policy shifts in corporate earnings, the market remains poised for potential volatility in the weeks ahead. All right, I'm way behind on time. I've been yapping with commentary way too much. Hey, is that the trash guy? anyways, it might be the recycling guy. Anyways, all right. Next up from Zero Hedge, our return expectations for 2025 too high. This was written by Lance Roberts. Let's see what Lance has to say. In his recent analysis, Mr. Roberts of realinvestmentadvice.com examined Wall Street's optimistic return estimates for the S&P 500 this year in 2025. Analysts project a median rise to 6,600, implying an 8.2% return, modest compared to the past 2 years of 20 plus percent gains. Optimism is widespread, with retail investors also expecting continued growth, pushing valuations higher despite economic uncertainties. Historically, stock market returns have averaged about 6% from capital appreciation and 4% from dividends. However, in the last 15 years, returns have significantly outpaced economic growth, fueled by corporate stock buybacks and unprecedented monetary interventions by the Federal Reserve and the government. Since 2008, around $40 trillion has been injected into the economy, supporting asset prices and consumer confidence. The artificial support has created a disconnect between stock market performance and underlying economic fundamentals. I wholeheartedly agree. When I started in this business almost 20 years ago, with doing analysis of, securities and, asset classes and things like that, that's really what you're focusing on. Today, it's like trying to guess, what's Nancy Pelosi going to buy next? I mean, I saw a headline yesterday, or I guess it was on Twitter, showing Nancy's stock trades in the last couple of days. And I mean, I guess people follow it, and I guess you can get some decent, some good returns on it. It seems a little volatile, in my opinion, if you're chasing these high tech names that she's investing in. But hey, to each their own. But yeah, it is a little funny to see that in the old days you would evaluate, well, does this company, does it have solid, fundamentals? Is it, got good profits? Does it pay a nice dividend? Is their future business, anticipation look good? Whoever their clients or customers are they in a good spot? So those are the type of things you used to do in the old days. Now it's like, well, the tech sector is going to be on fire, so I guess we just load up on tech, and that's been kind of the attitude of a lot of people over the last decade or so. All right. Looking ahead to 2025, potential headwinds include rising interest rates, slowing economic growth, and geopolitical risks. Trump's proposed policies, such as tariffs and spending cuts, could further impact markets. Analysts caution that elevated valuations and investor expectations might not align with economic realities, potentially leading to market corrections. And that's probably my biggest fear, is that the market is massively overvalued. And when there is that correction or pullback or whatever people want to call it, I think it's going to be quite painful if if you don't have your ancillary investments or your backstops set up in place, because they can get very, very rough. Despite these challenges, Roberts notes that the market may not crash, but is likely to experience lower returns compared to the past decade. A reversion to long-term growth trends seems inevitable unless continuous government and Fed interventions persist. Investors should prepare for a period of more moderate gains and adjust expectations accordingly. Ultimately, while stocks may still provide positive returns in 2025, they are unlikely to match the extraordinary performance seen in recent years. Well, yeah, when you dump all that money into the economy, what do you think is going to happen? It's not real growth. It's just trying to catch up to inflation. Managing expectations and focusing on long-term fundamentals will be key to navigating the evolving market landscape. I can't disagree with anything he said. All right, last up, the Monday morning outlook didn't go out, or Mr. Brian Westbury didn't send it out yesterday because the market was closed. And, I was working yesterday. I was here. I just, there was no point in doing a market recap, since, everything that was on the TV just had to do with the inauguration. I was like, well, nobody cares about this stuff. I mean, some people care. I personally don't. All right. This is the 60/40 model, and the elephant in the room is the title of this week's article. So let's hop in. Many economists and financial analysts have often overlooked the critical role of government expansion in their discussions about economic stagnation. With traditional economic models focused on factors such as technology, education, and market inefficiencies, they fail to address the significant impact of rising government spending and redistribution. Since the implementation of the Great Society programs in 1965, non-defense government spending has surged from 9.5% of GDP to 20.4% today, effectively dampening economic growth by absorbing resources that could otherwise fuel innovation and productivity. So in essence, you're taking money out of, the middle class, and you're putting it into the poor, who are just going to spend it on, whiskey and cigarettes. All righty. The unchecked expansion of government spending is a major factor behind the so-called Great Stagnation, with real GDP growth averaging only 2% over the past 2 decades compared to 4% seen from 1950 to 1973. Similarly, in the investment world, the once reliable 60-40 portfolio of 60% stocks, 40% bonds has failed in recent years. This is not due to an inherent flaw in diversification, but rather the Federal Reserve's monetary policies. Since 2008, the Fed's implementation of quantitative easing and its power to pay interest on excess reserves has distorted financial markets by artificially holding interest rates below inflation for prolonged periods. The Fed has undermined the bond market's role in providing a reliable income and stability, thus breaking the 60-40 model. Ultimately, the root cause of both slow economic growth and the failure of traditional investment strategies is excessive government intervention. Again, I've been saying this, I say this every year. Cutting government spending and restoring free market mechanisms would pave a way for higher economic growth and more effective investment strategies. Without addressing these elephants in the room, economic stagnation and market inefficiencies will persist. Again, it's just going to be more of the same, folks. We can continue on this path for another decade or so. And at some point, the United States, the wheels fall off the train, it comes crashing off the tracks, and we have a giant mess to clean up, and it's probably never going to be able to put it back together. Or as sensible Americans, we all come together and say, hey, we really don't get along on what we want to accomplish with our, the state, whether it's the federal government or their local governments. Let's just decentralize as much as we can and only do the things at a federal level that everybody agrees on. Like the military. Maybe keep the military here in the United States to defend us from invaders coming in our borders, as opposed to hurting brown people on the other side of the planet. That's my non-interventionist way of looking at life. All right. Well, if anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help you get on track. All right. Well, hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.